Hey, how's it going, guys? It is Relier, and today, as always, we'll take a closer look at what my investing portfolio looks like for the month of November 2024. As always, we'll first start by checking out what are the different individual companies that I have in my portfolio, and then we'll take a look at the different exchange trade funds, followed by the sectoral distribution of my overall assets, and we'll finish by taking a look at what are the different transactions that I've made over the past month. But it is important to note that for the rest of 2024, I'll try to invest as much as I can while also keeping a lot of money aside for the month of January to be able to pay back my mortgage on my rental property faster. So let's get to it right now, and first we're going to take a look at the technology sector, where you can see that I hold most of the big GAFAM, which are Apple, Meta, Google, and Amazon, as well as Elon Musk companies Tesla, that is worth quite a lot, close to 10% of my overall assets. My other big position is in Meta, and in most of these big tech companies, you can see that I am quite massively up on the average price that I've paid for. And so in this sector, I've been able to make some great unrealized profit, but I've also been able to secure a certain portion of profits over the past month where I've sold certain of my positions. Then the energy sector has also been performing quite well over the last couple of weeks and months, where you can see that I hold both Enbridge and Pembina, that are two oil and energy companies in Canada. And the most astonishing unrealized profit obviously comes from Pembina, that is up more than 110% on the average price that I've paid, I think, in 2022. But it is also important to understand that in both cases, as for many companies that I hold in my portfolio, I haven't included my total dividend income that I've received from these companies. But eventually, I'll try to put and to build up a great spreadsheet to be able to track all the dividend income that I receive from these companies. In terms of the financial sector, you can see that I hold one of the big Canadian banks, which is the TD Bank, as well as an insurance company, which is Manulife. On its side, Manulife has been doing pretty incredible with some unrealized profit of over 120%, and where I am reinvesting all the dividends that I am receiving from this company. But TD has been underperforming quite importantly over the last couple of months, notably because of the anti-money laundering problems that they are facing in the US. Nevertheless, I keep reinvesting as much as possible the dividends that I receive from both of these companies to buy even more shares for the future. Talking about two other companies that haven't been able to perform well over the last couple of months and even years, it is my two telecommunication companies, Bell and TELUS, where you can see that in both cases, I am quite importantly down on the average price that I've paid for, and where we've seen that these companies haven't had some great news recently, notably with Bell, that haven't been able to beat the analyst predictions for their latest earnings reports. But still, I'll continue to hold these companies as long as they're able to continue to pay great dividends, but maybe eventually, if we are able to come back to the average price that I've paid for, I might actually be tempted to sold a certain portion of it to reinvest it somewhere else. In terms of my consummation company, Couche-Tard, over the last couple of years, it has been able to perform quite well, but lately, over the last couple of months, we haven't been able to see some great momentum. Nevertheless, I highly believe in the management board of this company, and I really believe in the company itself to become eventually one of the top dogs in their sector, meaning that I'll keep holding this company for the long term. Now for the next sector, which is the material sectors, you can see that I hold the small company Savaria, which is mainly focused on wheelchairs for elder people. And with the aging population, I have some strong belief in this company to be able to continue to perform as they've been able to do over the last couple of months. In fact, in total, you can see that right now I am currently up over 46% compared to the average price that I've paid for, while receiving great monthly dividends from this company. Talking about another interesting monthly dividend income company, I currently also hold the real estate investment trust Raucan, which represent quite a certain percentage of my total portfolio. And in total, we can see that even if I am up by about 40%, this stock over the last couple of weeks and months is pretty much stagnating trading and isn't gaining that much value. Eventually, this might be another companies where I might be selling a few shares of it to reinvest it somewhere else. Then I also have a super small stake in the 5 and plus company where you can see that initially I've paid only about $468 for about 100 shares of it. But over the last year, we've seen that this company has truly been able to explode in value, and at the moment I'm currently up by over 43% on the price that I've paid for it. Now let's take a look at the different exchange trade funds, aka ETFs, that I have in my investing portfolio. The first one that you can see is one of the best ETFs in the world in my personal opinion, which is the Vanguard S&P 500 Index ETF, tracking the 500 largest American companies by valuation. In total, you can see that the unrealized profit that I have on the average price that I've paid for is of over 42% at the moment. Now, to be able to track the entire market, I've used the iShares Core Equity ETF with the ticker XEQT. On its side, you can see that this fund is performing pretty much okay with some return of about 11% on the average price that I've paid for it. For the ETF that I've bought to track the Canadian market in particular, I've bought the iShares S&P TSX ETF with the ticker XIU. On its side, this fund has been able fairly okay with some return of about 15% on the average price that I've paid for, but you can see that it's still massively underperforming the American market. Then for the next ETF, which is the famous Schwab US Dividend Equity ETF with the ticker SCHD, this fund on its side is tracking some of the best and the highest dividend payers in the United States. And on its side, we can see that this ETF has also been able to return some great unrealized profit of close to 19%. After to be able to track great growing dividend companies, I've decided to pick the Vanguard Dividend Appreciation ETF with the ticker VIG. On its side, this fund has also been able to perform pretty well over the last couple of months and years with some unrealized profit of about 33%. But since I already have a lot of dividend companies in my portfolio, I might sell this position to reinvest it somewhere else in the next couple of weeks. And finally, for my liquidity reserve, which I hold in the Global High Interest Savings ETF with the ticker cash. As I told you earlier, I have the objective to be able to pay back my mortgage faster, eventually to refinance my property to buy other properties in Quebec. So this liquidity reserve will be pretty useful for me to keep my money there if I need it in the short term. And it is also able to give me great monthly income from the different savings account in which it is investing in Canada. So in total, my portfolio update is currently up by over 43% or some unrealized profit of over $55,000, which means that my investing portfolio is currently at an all-time high close to $183,000. For the ETF sections, as I just mentioned, I'm currently up by about 13% on the average price that I've paid for. Eventually, what I want to be able to do is to maybe sell the Vanguard Dividend Appreciation ETF and buy different international ETF to track the global market, but most precisely different other emerging markets as well. And at the same time, once I'll put a certain portion of the cash that I hold at the moment on my mortgage in January, I'll also be able to continue to invest notably in great ETFs such as the VFV ETF and the XEQT ETF. Now, in terms of the sectoral distribution of my portfolio, you can see that by far the two largest sectors are the ETF sectors with about 32% of my assets and the technology sector with about 30% of them. After, we can find other great sectors that I hold with different individual companies such as the financial sector and the energy sector. And at the end, we have the real estate sector, the consumption sector, the communication sector, as well as the materials sector. For the future, my objective will be to increase the ponderation in the different ETFs that I hold to over 50%. And I also want to be able to keep as much money invest also in different technology companies such as Meta, Tesla, and Apple. Now for the different transactions that I've made over the past month, you can see that I've been mainly buying a few shares of cash to increase my liquidity reserve to eventually pay back my mortgage. But I've also been buying at the beginning of the month a few more shares of the Manulife company because I want to also keep investing in different great financial companies and energy companies for the future. But now on your side, if you're looking to find great companies to invest in with the coming of Donald J. Trump as the next president of the United States, well, check out the video that's gonna be right over here, and I will see you soon. Peace.